Hi everyone, and welcome to this webinar, this Forex webinar, where we will be looking at the start of the US session and also following on from what was going on in the London session, because we've, in case you weren't with us earlier on, David and I had another webinar that we started at 7:30 London time. And it's actually quite nice because we've got a bit of a narrative for what happened this morning, and we'll now use that base, look at that and then actually see what's happening with the, what's likely to be happening with the US session. And in fact, it's quite a nice way because it's very typical of a day trading day. So if you day trade, this is what you've got to be aware of. You've got to look at the different sessions. You have to almost see them as separate individual markets. And a move that started in one session isn't necessarily going to carry on and follow through into the next. Partly because of there's going to be some fundamental data that's going to be released that's going to impact the local currency, and of course the local currency coming up, or currencies, is going to be the US dollar and obviously the Canadian dollar. Doesn't mean there's not going to be moves in other currencies and other pairs, but you almost 24 hours, it is a 24-hour market, but you really need to see them almost three separate sessions, each with we all know when they open, we all know when they close, and yes, there may be some carry through, but more often than not there isn't. But before we do that, as usual, we have the disclaimer that I know you can see on your screen. As always, it can be a risky business, it can be, so please don't ever think of using money that you cannot afford to lose. So there we are. For those of you who come along regularly will know that these sessions are, I run it together with my husband David. There we are, both of us sitting there smiling at you. And the way we look at the charts, the way we look at this market is using the principles of volume price analysis for the technical analysis side, but we also consider the fundamentals, the related markets. And I said this morning, more and more, what is happening with the politics as well. It's what we call our 3D approach to trading and investing, actually. But actually, it should be 4D. There's an element, the fourth element, which is the political element, as we know, obviously with Brexit, but also China. We're looking at Chinese news and how some great news out of China has given the market some very positive vibes. It's what it's, this is a very long bull market that we're in at the moment, and bull markets will stagger on for some considerable time, and any piece of news that comes out that is going to support this view, the market will latch onto it and kind of disregard everything else. It's sort of confirmation bias. They have an opinion that the market is still in a bull run, and they will look for the bits of information that will support that. The issue with Chinese data, as I said this morning, got to kind of look at it, take it with a little pinch of salt. So that's what we use, and all this is explained in our Forex program in great detail. As we see, we have the four capital markets, and Forex pretty much sits at the center. And what we also do, what we've also developed, is we developed our own trading indicators. The Forex specific ones come as bundled up as part of the currency dashboard. You don't have to buy them as a bundle, they are available individually. And the one we always start with is the currency strength indicator. That's where the market is divided, all the currencies. We see the individual performance in any particular time frame, what's being bought, what's being sold, and we use it in a myriad of different ways. And the best way to see how these indicators work is actually in the live market. So while I set my charts up, I'll pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's as nice, as I said this morning, I hope it's as nice where you are as where we are, because it's absolutely glorious here in Hampshire, and it's a lovely, sunny, warm spring afternoon, so I hope it's good where you are. If this is your first time coming along, we run this as a two-hander between myself and Anna. We flip-flop between, I've got NinjaTrader running. I know we generally focus on NinjaTrader, but we're also going to have the MT5. Anna's going to be on MT5, and I'll be on NinjaTrader. I've also got TradingView running as well in the background, so we're kind of covering all three platforms at the moment. And if you do have any questions, please just drop them in the chat box. We're happy to answer them there. If they're short questions, if you've got longer questions, we will answer them on air for you. Quite a lot going on in the fundamental world at the moment. We had the German data and the French data out this morning for the euro, which drove it lower, but it's gone into consolidation since then. And we've had some I have to say, stellar retail sales figures for the UK, which has seen a bit of pound buying this morning, but probably not greatly due to the weight of Brexit, which weighs its cloak over everything. So really any data that comes out in the UK is always tempered by the fact that we've got this huge Brexit millstone to be resolved at some point, no doubt, in the future. I'm going to pass back to Anna, and we will get going.
And just a quick look at the calendar we can see here. That's obviously the European news and UK news is out of the way. Crucially, we've got retail sales for Canada, got retail sales at the same time from the US, and core retail and retail sales. We've got some the ADP, and we've got the Philly Fed. The Philly Fed is shown as a second tier. This is this orange. This is sort of medium impact, but in the past it has had an impact. But it's also the Philly Fed has come up with some really very strong numbers. You can see here back in 2017, I mean, they were up in the to 40s or something, which was just totally off the wall, basically. But anyway, the market still pays attention to the Philly Fed. You see, we had a dip back in where are we? April. That was March, April. That's in February. Came back strongly on last month. So we'll see what happens there. And all being released at 1:30, and that often explains why, if you're looking at charts at the moment, things are in consolidation. They're not going. There's no divergence because the market is waiting. Now, the reason I've got the euro dollar up, because the euro dollar was this morning, and there've been so many lessons from a VPA perspective of how we use the indicators in conjunction with volume price analysis. And if I just very, very quickly, normally I have the 3-minute chart up here. For those of you who maybe it wasn't your time zone this morning, maybe I will have to go to the 6-minute chart. Yeah, basically this was the release of the news. There were 2 releases this morning, quite unusual. 8:15 was the French PMI, and then at 8:30 we had the German PMI. The French PMI didn't really we didn't have a lot of reaction to it, but the German one did actually pull it down. We've got the volatility candle, and whenever you see the volatility candle, a lot of volume underneath it, what we're expecting is a retrace within the spread of the candle, which we have. And sometimes it's time to watch for a potential reversal high. In fact, it didn't. It consolidated a further leg lower, and in fact on the CSI we could see that the euro was oversold, the dollar was overbought. You think, okay, well maybe it's time for potentially for a trade to the long side. But what's actually happened, it's gone absolutely nowhere. It's just gone into consolidation. Reversals, this is what can happen. We are in a holiday week. I don't know what the liquidity, I'd have to check out the liquidity data. Those of you who have come along recently will know that I've actually found this really good site, just quickly, because to tell us, just as an explanation of why, because everything was setting up for reversal. This is what would normally happen. And there we are. Where is it? Here we are. Let's have a look just very quickly. And you can see if we had a drop off in the liquidity. What's that one? That was at 9 o'clock this morning. This is UK time, obviously, when everything was kicking off, just after 8:30. Then you had a slight reduction. You see here the figures, 97%. Not a huge, these aren't very big numbers. You should really want to see, that's very deep. That's 240% of what the norm is. And you can see here also the liquidity, obviously, in the Asia session, which is always going to be less because there are fewer participants. We've now got 3 financial centers open simultaneously. So let's have a quick look there. So this is the euro dollar, and obviously with lots of volatility, lots of spiky price action. And the decision is, whenever you've got news coming, is, well, do you try and take a trade ahead of the news? Do you place a limit order? Do you wait for the news to release? And then you then perhaps attempt to either, there's nothing wrong with attempting, as if the chart is setting up and you see a setup that looks as though this is going to carry on in the direction that the market is going to carry on, the direction that was precipitated by the release, that's fine. That's fine. Or what tends to happen, a lot of traders don't like that because it's like you're chasing price. Let's wait till it calms down and see whether we can get the reversal. And that actually hasn't happened. Now, the chart that you can use to help you with those decisions is the Renko. This is set at the ATR setting. It's not a fixed value. I'd have to go and check what the setting is at the moment. But this is the move lower, and you can see here everything is smoothed out. These Renko bars, if you were with us this morning, because there was so much volatility, they were, there were spikes either side. They never end up with spikes. They always end up in these little bricks. Renko means brick. But at the time, because there was so much noise, so much energy had come into the market, as they were forming, they were reflecting what was going on in the market in real time. So this is the move lower. The way this indicator has been developed, David and I have developed it, is we read it in conjunction with the trend dots, and they can give you a potential entry setup. It's when they all turn one color, either blue or red, but it also has to be matched with the trend monitor. This is the potential reversal, and you can see here we've had an attempt to rise. The dots have turned bright blue, but look at the monitor. That has never transitioned to bright blue, and really we want the two together. Now, this was a little move higher this morning prior to the London Open. That was a perfectly legitimate move. There was nothing wrong with that. Then we had the London Open with the usual volatility. Because the news was coming out, really no one knew what was going to happen. But once it had settled down and the down move got underway, as you can see here, it was a substantial move. So we had here from 120, we got 12.95. Let's go down to this support level here, 12.95, 12. It's about what, 50 odd pips, which is a 50. But it also, what is also interesting is the time that it's actually taken to get those 50 pips. Sometimes you think, sometimes it can happen very quickly if you're on a pound yen. Sometimes it doesn't. It can happen in in a very short space of time with volatility. Volatility is just the compression of time. Now, what's happening here is quite interesting. It kind of flip flops. It's really going sideways, and what we're waiting for is we really need a break of the low of the session to see if this is going to carry on low. And here we would look to our time charts. Let's move this to the 6-minute chart. This is the 6-minute chart. And what we have here, we have the volume point of control. This is also reinforcing this phase of price action. We are moving sideways, and we've got half an hour to the retail sales data for the US. So at the moment, it's really, any breakaway trade from the volume point of control is it going to go very far? Because we've got half an hour to the news. I doubt it very much. I haven't even checked the option expiries, because that also may affect the euro dollar, particularly if there are some big ones today. Let's look at the 30 just to see. And here we have the consolidation. It's consolidating within the spread of this volatility candle. It's really not going anywhere. This was the break lower from the volume point of control when the news was released. So really, it's a wait and see. Now, what's interesting is if we pull up the CSI here, when I said earlier that the CSI is there, it's to filter potential trades. It tells us what's being bought, what's being sold, and do you have strong divergence? I mean, what we have here, we've got the yen rising strongly. We've got the New Zealand dollar down here. So maybe this is just on the 5-minute. Is that setting up for it's a potential move in this pair? It's giving you so much information. Let's just move over to the 30-minute, just as there we are, because this is actually, the 30-minute really reflects what's been happening you know, the session that's just gone. Now, interestingly, this is the dollar buying, this is the euro, obviously the euro selling. That's flattened off, and that has flattened off. When they're moving in the same direction, or you have this flattening off, what the indicator is telling you is there is still no strong divergence. So this is the picture coming into the US session. So if you're coming to your monitor now, your terminal now, and you don't have a pre-selected, you don't like to trade, I don't know, 3 or 4 different pairs that maybe you've got to know, you're just simply looking for the best trading opportunity. What this indicator is highlighting is what has gone on before and what is potentially going to happen, certainly moving into the open. And the 13-minute chart is quite a nice chart to use, that particularly if you've had strong moves in individual currencies, and we certainly had quite a strong sell-off in the New Zealand dollar. There's obviously been strong buying of the US dollar. These two, that's the dollar yen, that is also telling me that on the 30-minute is in congestion. It's not, there's no divergence there. This is the Swiss franc. We've got the pound. This is the, as I said, David said, the pound buying. And this morning we had here, we were looking at the Canadian, and I said at the time, I said, oh, the Canadian looks like there's a bit of a buy on the Canadian. That's kind of come to a bit of a stop, and that's rolled over as well. So when you go down to the faster time frames, and you see, well, how is that reflected on the faster time frames? Again, you've got this very flattening off of the euro. The dollar looks like it still want to carry on lower. So, as I said, if euro dollar was your pair, what this is telling you is just sit back, just wait, and you're really going to have to pick your moment. And as I said, by looking at support and resistance, just waiting to see where we're going to have some kind of strong divergence. And then we also have to look at what we can see on the daily chart, because obviously the daily chart is for context. Now, it's had a very big move, you can see here, and the buy is really just the bottom of this wick here. Now, it's going to have to, you're going to have a lot of volume coming in if that is going to push higher, or are you just going to, it's going to sink even lower and close even lower. But given the extent of the move that we've had thus far in the euro dollar, you also have to look at it and say, well, what is the potential? Am I going to see something of this magnitude moving into New York? I don't know. We'll just have to wait and see, or maybe you can pick off something based on this little wick that we can see here. The nice thing about MT5, it's got 8-hour, the 8-hour chart, which breaks it all off. This is the big fall that we've seen this morning. So this is what we are dealing with at the moment. Is it going to carry on lower? Where is it going to go to? Well, the initial target is here, is the S4, which is at 12.36. We look at the 30-minute. Let's have a look. That's a different one. So it already hit the S6. On our Camarilla, we've got 6 levels. 4 is the first one where if it breaks, it's taken to be as a valid break. It did go, crash through it got through to the 5th, and it got to the 6th, kind of provided a support platform. Obviously that came through, but it actually closed above the S6. So we take this level here, 12.48 as the current support. Now, if it breaks that, we need to go up a time frame. Let's have a look, because we've only got 6 there. And as I said, this is where it will be aiming for 12.35. But we have to wait for the news. So going back to the CSI, the CSI is also telling us the dollar is is looking to be very overbought. The euro, you can see it turning over. What's going to be the driver for this pair? Is it going to be the dollar, or is it going to be more euro selling? So lots of information there, lots of decisions for you to take, depending on the type of trader that you are. As I said, whether you're just looking for a trade and you really don't mind which pair that trade, the trade is delivered, or are you a euro dollar, on a short term, on the faster time frames? This is what you are facing at the moment. While I change and move over to David, if nothing, as I said, because I really have no idea if it's just everything is in consolidation and just waiting for the data, I've actually had an inquiry, well, an email in from someone, a message, where they looked at the 4-hour chart on the Aussie dollar and the New Zealand dollar, and they went long on one and short on the other, and he wanted an answer. And I really think by the time I've written it all out, it's easier for us to explain on air, and then he could just watch the replay. If you've got any questions, it's rather nice actually, because it gives us, when markets are just not doing anything. If you've got any questions either about the indicators or VPA or something that that you're considering, then David and I, it's never going to be a recommendation for a buy or a sell, but we'll certainly give you our view of what we can see on the chart. So I'm going to look at Aussie dollar and New Zealand dollar and see why he went long in one and short in the other, which is, there may be a strong divergence between the two majors, but usually the majors, they do tend to track one another. But I'll go and have a look at the chart.
Thanks, Darling. Okay, over to Ninja Trader, and you saw me flicking around on the screen there probably. I've actually stepped down to a very fast chart. This is a 15-second chart top left. This is a 3-minute chart in the center and a 5-minute chart over on the right-hand side. And I actually did this last week on the indices, if you were with us on that particular webinar, purely because on the daily basis, the price action was very contained, very narrow, and it's one of the ways of digging out trades. If you're comfortable with trading at that sort of speed and repeat it in and out of the market, that's fine. This may not suit you. But the other reason for highlighting it is also a great way to practice VPA. Go to a fast chart. If you've got Ninja Trader, then you can go down into the seconds. But if you're on MT4, MT5, go down to a minute chart or something like that, 2-minute, 3-minute. And just practice VPA, because VPA applies across the piece. It doesn't matter what the market is, what the instrument is, or what the time frame. The same rules and logic apply, and the same analysis applies. It's just, it doesn't really matter what is the instrument you're trading at the end of the day, because it is a chart, and you can apply it either as a scalping trader or as an investor. Again, makes absolutely no difference. It's one of the beauties of the methodology. So as long as you have a price chart with volume, that's all you need. This is basically the pound Swiss. The reason I've gone to the pound Swiss, I'll just flick that down because I've actually got Trading View up here, which is quite handy. And I've got multiple CSIs across the piece. This one is on 10-minute, this one's on 20-minute, and this one is on 30-minute, I think. Yeah, there we go. So it's 10, 20, and 30 basically. And what we're seeing at the moment is the opportunities are really, you've got the pound buying here, which you can see is across the 10, the 20, and the 30. That is something you're always looking for. When you're using a multiple time frame approach, it's not just about applying it to the charts, it's about applying it to the indicators as well. Because if the buying or selling in a currency is occurring across your time window of opportunity, if you're looking at this as a scalping opportunity, you might have this as a 1-5-10 or a 3-5-15, something like that. Or if you're on MC5 or MC4, it might be 1-5-15, so on and so forth. But if what you're seeing is universal sentiment towards a currency reflected across your time window, in other words, across here, then that's positive, because it means that the strength of that particular trend is very strong for that particular currency. And then it's a case of matching up what you're going to consider as an opportunity. In this case, I've got the Swiss franc up purely because, again, similar picture, we've got the Swiss franc, this green line. Might not be able to see it very clearly on the screen because it's rather dark, apologies. But this is the Swiss franc here, which is falling over onto 30, and it's falling pretty strongly. So that's a trend that's, if you like, already underway, certainly in terms of the 10-minute, because the two have crossed. So that trend's been going on for a little while, really, since this started moving down and this one started sideways and now moving up again. On the 20-minute, we've yet to cross, and on the 30-minute, we've got some way to go. So assuming this buying continues down on the faster time frame, then that should replicate over onto the 20 and over onto the 30. That's if you're looking to join an existing trend. But if you're looking for a reversal opportunity, then there's plenty of them setting up. And again, it's one of my preferred tactics, to be honest. I like looking for the opportunities to get into a trend early and take advantage, because what I'm trying to do all the time is maximize the trend. When you get into an existing trend, as the example of the pound Swiss, as here, for example, you've already lost some of this. You've lost this bit and you've lost this bit. So you're getting into a trend that's already underway. Nothing wrong with that. It's a lower risk proposition purely in terms of the monetary exposure to the market, because your stop loss will be that much tighter. Because a trend is underway, your stop loss can be much, much closer to the market. When you're creating a position where you're going in on a reversal, as here, for example, if we were looking at, let's say, the New Zealand dollar down here, the grey line, which is very oversold on all three, possibly against the yen, possibly against the dollar, either would be fine. Then in that case, either of those, in fact, any of those currencies could stay there for some time. The dollar could stay overbought, and the yen could stay overbought. Alternatively, the New Zealand dollar might stay oversold, but you might see one of them move. So, for example, if you opened a position on a reversal of the New Zealand yen, for example, but actually only the New Zealand dollar moved, then what you would see is congestion, because the move in the New Zealand dollar would probably not be enough to generate a strong trend, given that the yen was still remaining in very overbought territory. That said, the monetary risk that you're going to have to lay on the table for a reversal opportunity is much greater, purely for that reason, because you're going to have to allow for example, the dollar here, this was, where are we, 7:48, 9 o'clock, here we are. So for the last few hours, the dollar has been up in this region, as indeed has the yen. That means you've got to be patient. If you're going to wait for a reversal, you have to be patient. It also means you're going to suffer this buffering, which is going on the whole time, and your stop loss will have to be that much wider, probably 2 or 3 times as wide as a trend-based stop loss. The payoff, of course, is that once that reversal does indeed start to take place, and this is a market of mean reversion, so currencies cannot stay overbought and oversold forever. They have to move. It's as simple as that. It's just a question of when. And the when is when you have to be patient, and that comes at a price. But the payoff is that you get into that trend early, so you can maximize the trend. And of course, the other benefit, of course, the side benefit, if you will, is that if you do get in early and maybe the trend runs out of momentum, let's say, for example, the dollar rolls over, but perhaps only gets halfway down the chart, the New Zealand dollar's coming up, maybe they get to the middle or somewhere off the middle and they start to meander, move into congestion, then, you know, at least you've taken something out of that particular market, and you can take that off the table depending on what the chart is telling you. So there's lots of different ways of approaching this market. It's just what suits you, your temperament, your risk profile, money management, and so on and so forth. As I say, my personal is I always like to look for reversals, because I like to get in early and maximize whatever return I can from a position in the market. But there's absolutely nothing wrong in jumping on a trend that's already underway. Let's just drop that back out of the way again. Here we are on the pound Swiss. Let's move that up a little bit. Let's make that 30 seconds just to slow it down a tad. There we go. What are we seeing at the moment? Well, certainly in terms of the fastest chart of all, the 30-second. Let's just pop that up. There we go. We're in congestion. We've got several reasons to tell us that. First of all, we're trading around the volume point of control. This yellow line here is the fulcrum of the market. You can think of it like a seesaw, for example, where you've got two equally weighted people on the seesaw. So it's got no momentum, it's got no bias, if you will, to one side or the other. So it's just flat. And that's where the market is in agreement, price agreement, if you like. The price action is going to oscillate around there. The volume itself, which is knocked back behind on the histogram, that is going to be building the whole time. The greatest level of volume always sits behind the volume point of control, where the fulcrum of the market is. And then as you move away from there, at some point, a bias will develop. In other words, the market will become bearish or it will become bullish. And that sentiment will start to weigh and generate a trend away from the volume point of control. But until it does, it's going to oscillate around this particular price region. Once it does start to move away, then you start to bring in the other aspects, such as price-based support and resistance. We've got two examples here. We've got one below, this wide blue dash line. That is a potential support platform. It's been tested several times. It's literally just being tested as I'm talking. The wider the line, then the stronger that level of or platform of support or ceiling of resistance will be. So every time it's tested, it gets a little bit stronger, and so on. And then that's represented in terms of the thickness of the line. So that's price-based support and resistance. The VPOC itself then gives you another aspect to support and resistance through the prism of volume. And as you move up and down the histogram, up here, for example, we've got very light volume on the histogram. So if the price action gets up to this point, certainly from a volume perspective, you would expect it to move through here pretty quickly, because there's very little in the way of volume to act as a barrier to an advance in price. But equally, if we go to the downside, we've got quite a lot of volume down here. So if we want to battle through this region, you saw the market test this level, came down, shot back up again, finding it quite tough going through here. So we've got price-based support here, not so strong as this level, because it's not such a thick line. This has only been tested 3 times. But we've also got quite a lot of volume here as well. So for this market to break through that region, it's going to have to go through here with volume associated and some good price action. And at the moment, all we're seeing is congestion on that particular time frame. But that's congestion on a 30-second chart. It could be congestion on a minute chart, 5-minute chart, an hourly chart, whatever it may be. And the little pivots just help to define those areas of support and resistance. They give us some levels. They also tell us in real time what is going on, because as a trend starts to develop and you get the little pullbacks, when you get a little pivot, as long as the pivots are higher highs and higher lows, that is telling you we're developing a trend. As soon as we move into congestion phases in real time at the live edge of the market, once you start them developing and you see them building floors and ceilings, you know you're moving into a congestion phase, and you've got to wait and be patient until it breaks away from that area. Pretty much the same across the piece. We're just in congestion. That's on the 3-minute. Again, you can see here this very strong ceiling up here, not as strong as that blue line on the previous chart, but certainly a decent level of resistance, which, as you can see, has been tested 3 or 4 times already, and is capping off the advancement in price for the time being. A little bit of buying coming into that last candle, decent volume under there, still trying to rally higher the market. Then we go up onto the 5-minute. Exactly the same, really the same picture. It's just reflecting the same thing. We've got the volume point of control here, ton of volume in here, slightly lower volume there, but pretty heavy. We've got heavy volume under here. And really, it only gets lighter once we start getting through these regions here, and very deep down towards this level. But once you get through there, then you might expect the market to move. But for the time being, the market is in price agreement. It's just going nowhere. Go down onto the 15, certainly for this pair at any rate for the time being. Go down onto the 15. What have we got there? Exactly the same. The VPOC's a little bit lower. Absolute heap of volume. Just pull that back a little bit. Absolutely tons of volume sitting in around the whole area. The volume point of control here. We've got some layered resistance in price resistance. This one here, this red dash line, is very, very strong. So if it gets to that point, then it's going to struggle, probably. And again, it's another reason for having multiple timeframes open, because every single chart gives you different information. You can see here we've got another level above there, not so strong as this one. This one is extremely strong. So you would expect the market, once it gets to that point, to at the very least congest, struggle a little bit. So if you're on a fast chart and you've got your 15-minute chart up or whatever it may be, that will give you another piece of the puzzle, another piece of the jigsaw. Last couple of candles here, we had indecision. Now we've got weakness coming in, wick to the upper body, decent volume under there, and looks like we're going to get a repeat of that. So it's pretty weak at the moment, this particular market. And you're seeing that reflected right the way back onto the 30-second chart. It's starting to move away from the volume point of control on 30. Let's just go back to the indices themselves, the currency indices, just see what they are all doing on an individual basis. This is the euro on a 5-minute time frame, and really that was this was the move this morning around our time, London time. And since then, we've been in sideways consolidation. We're now starting to see a pickup in potentially some bearish sentiment, certainly in terms of the Euro index at any rate. Just move that out of the way, sorry. This is the yen. Let's pop that up there. Again, some buying, but it's not particularly strong. We're not developing a strong trend at the moment. It's just crawling higher, no more at the moment. And have we got news at 1:30 in 3 or 4 minutes time? So, you know, it's no great surprise that we're seeing markets in congestion. Okay, we've got a whole bunch of stuff. And this is the dollar. And again, you know, this is 9 o'clock. So we had some bullish sentiment towards the dollar early part of the London session, and that's all fizzled out. And now we're waiting for the news and we're seeing consolidation. And of course, if you look at any chart in terms of consolidation from a volume perspective, then what you're going to see is sideways price action and limited participation, because that is what consolidation is all about. It's about the market makers and the big operators stepping out from the market and not participating for the time being. And at those points, you often see trap moves. So let's go back to this one. I'm just going to move away from that. Let's go to a dollar-based pair. It's probably more interesting. Let's go, I don't know. New Zealand dollar, nice move this morning. Okay, let's go New Zealand dollar. Let's take a look at that. Here we go. As we saw on the CSI, very heavily oversold. And one of the other things you obviously want to see is you want to see what whether that's reflected across the New Zealand dollar complex. So let's just go over to, sorry about that. Let's just pull that up full size. There we go. That's on the CSI. And I've got the, let me go to the matrix. No, let's go to the array. Let's isolate out the New Zealand dollar there. There we go. So it's an interesting picture. This is on 10 minutes for the New Zealand dollar. So I've isolated out the New Zealand dollar. So what we're looking at here is basically all the New Zealand dollar pairs. And as you can see, for New Zealand yen and New Zealand dollar, they are the weakest at the moment, and that comes as no surprise. If you remember from the CSI, at the top of the CSI, we had the dollar very strong and the Japanese yen were both very heavily overbought. So it's no surprise to see that. And then in the mid-table, you've got New Zealand CAD. So it's a bit of a mixed picture. Generally speaking, it is pretty much selling New Zealand dollar, although not universally. New Zealand, the CAD is a bit of a standout, and that may well stand out even further if we've got Canadian news coming up shortly as well. Just go back to the charts. There we go. That's due out in a couple of minutes. Let's. I'm just going to move this back up to. Let's make that 1 minute. Let's make that. That's 3.5. That's better. 1.35. So I've got 1.35.15, and then I've got the Renko down at the bottom here. And the Renko on NinjaTrader works in a similar way to that on MT4 and MT5, in that you have the opportunity to allow the indicator to advise which is the optimal setting for the indicator itself. In other words, it will select the optimal brick size, or you can choose the brick size yourself. So you're always trading at the momentum of the market when you choose the optimal setting, and that will vary from pair to pair and from time frame, from session to session, which is why we developed it. It's the Renko optimizer, and you just simply select it up here on the time frame. You select a 1 minute or 2 minute. I've got this on 1 minute at the moment, and it's telling me that we're running a 12 Renko, in other words, a 1.2 pip size for this particular currency pair at this particular point. News must be just about imminent, because the markets are starting to jump around, as they always do. Prior to the release, they'll start to see volatility come in.
Oh, Don, just say on the CSI, it's interesting to see where the currencies are, if there is an extreme anyway.
Yeah, and as Anna said, before a news release, it's always interesting to see where the currencies are ahead of any particular release, whether they're strongly overbought, oversold, and whether you believe, you know, there are opportunities for getting in on a reversal. Lots of insider information. Has it actually been released yet or not? No.
Yeah, I suppose so.
The volatility indicator is triggered. It's triggered in real time. You don't have to wait for the bar to close. You can see here. We know we've got volatility coming into the market. The price action has moved outside the average true range, which is how the indicator works. Average true range is just a metric for looking at what could be considered the norm, if you will. So it's looking at the previous number of bars on price action and judging whether the price that we're seeing now has moved outside of that. And if it has, then it will trigger the indicator. It means there's volatility in the market. It means the market makers are participating, generally speaking, because it's an opportunity for them to trap people into weak positions once again, which they do repeatedly throughout the trading session. Let's just pop the 1 minute open. That's the ton of volume that's come in. We're now 1 minute in, so I'm assuming the news is out. I haven't got it up in front of me.
Yeah, I've got Talking Forex up.
Anna's got Talking Forex. Talking Forex is a great feed. It's not a free feed, but I believe you can actually get it with quite a few of the brokers now are offering as an incentive. So if you find a broker that you prefer, then check them out, because Talking Forex is widely available as an adjunct to the platform itself. I'm not sure whether it's on a live platform or whether they offer it on demo, but you can certainly find them.
Everybody's been spending.
Oh, it's positive, is it?
Yeah, for all of them. I mean,
Yeah.
looking at the Philly Fed, that's Philly Fed's usual nonsense figures. So Canadian retail sales up, US retail sales up.
Okay, let's have a look at let's just drop that out of the way for a minute. That's looking very positive move there. Moving away, decent volume, nice move. You can see it on Renko. Building nicely on Renko, just picking up the tempo again. Trend monitor, you can see down the bottom here. What we love about the trend monitor is it just helps to keep us in. When you get these little pullbacks, the trend dots, you can see here they work brilliantly with the Renko, but what you also see is they change color quite quickly because they are close to the price action, which is why we always advise that you use them in combination. Use the trend dots with the trend monitor. You can see here the trend monitor didn't change. This is where it started to revert on the trend dots. What did happen here, we had a minor change in color shift into a darker red, but never went into a darker blue, or certainly not blue. So it just held us in and we reverted back. Then the trend dots revert straight back to red again. On we go, down we go. And again, exactly the same sort of situation here. We had the red trend dots. We go into some brief consolidation. The trend dots transition into a grey color, which signals that we're moving into congestion. We had a little blue one, then we're back into grey. Now we're back into red again. Similar sort of situation here, but not a flicker of change on the trend monitor. The trend monitor is the one that's going to keep you in to hold and maximize the potential from any trend that develops, because that's what this game is all about. If you got in here and you were down here and then this happens, I guarantee you'll close out, because by the time you've taken that and taken the spreads out, you've seen a fair chunk of whatever profit you had drain away. You're out. As soon as this starts to happen, you have trader regret kicks in. You're thinking, oh, wish I'd stayed in, should have stayed in. Hindsight's great. It's useless at the live edge of the market. You need something like the trend monitor to help to give you that perspective on whether the trend is truly weakening or whether it is just simply a pause in the longer term trend. And this is what we cover in the education program very heavily, the difference between primary and secondary trends, understanding how to identify them, because if you can identify them using volume price analysis, which is one of the key ways we use, then that is going to help you enormously to keep you in those positions to maximize the profit potential as it develops. We've got the price-based support and resistance on here, as you can see. Once again, this very strong region up here, which capped off this move here. So this is now a very, very strong ceiling in place. This one was breached, less strong, but now it's been breached. It's going to act as resistance in any move higher. So we've got a bit of protection in place. We're just seeing a little bounce. We've got the pivot come in, so we're now going to see a little bounce. You can see the trend dots developing here as well. So that's a nice, decent move. We go back to look at the other time frame charts, see what they're telling us. What's interesting is if we bump up to here we go, up onto the 5 minute time frame now. ton of volume coming in. We've got volatility on 5. We know for a fact there's been some buying in here because you've got a decent wick to the lower side of the candle. Just pull that out a little bit. There we go. You can see it a bit better now, hopefully. So we know we've got some decent buying coming in under this candle. And what we also expect at this point is we expect some sideways price action. So we are not going to be surprised if we see it on our faster time frames, because our 5-minute is telling us that we could well be witnessing that in due course, purely because when the volatility is triggered, we anticipate that price action may well reverse inside the spread of the candle, because that's what the market makers like to do. It's very easy and it's a great way to make money for them. If you go up onto the 1 minute, what's the 1 minute chart telling you? Loud and clear, you've got a nice 2-bar reversal here. So if you overlay this candle on that one, what have you got? You've got a hammer candle, if you like, a 2-minute hammer candle, because these are 2 1-minute candles. So stick that one on top of it, and what have you got? You've got a 2-bar reversal, or a hammer candle in this case. So we're expecting to see some reversal off that. Up and down the chart, we've got pretty thin volume. We've got some price resistance up here. We've got relatively thin volume here, low volume nodes. So if it's going to retrace all the way back up, you know, it's not going to battle that much. What we're looking for now is to identify whether this is indeed a full-blown reversal. Now we've got the VPOC jump down to join it on the volume, whether this is just purely a pause point or whether this is actually a full-blown reversal in trend. If it's a reversal in trend, what you'll see is it start with the 1 minute. In fact, if you have the 15-second up, that's where you see it first. You go 15-second, 30-second up to the minute, through to 3, up to 5, down to 15, and right the way through over to daily if it's a longer term trend, change in trend, obviously. And of course, we've got the Renko down here, which is always helping to smooth out that price action. It just it removes the oscillations, it removes the whippiness of the price. It just gives you a much smoother blend, and it's great to use in combination with time-based charts. You can either use it as an entry mechanism, or you can use it as a helping to keep you in mechanism, or indeed, of course, you can use it as a getting out mechanism. But it just gives you a different perspective on price action. It just gets away from the volatility. It's just represented in terms of bricks. It's a much more, I can't think of the word to use, but it's a methodical, if you will. It's a more methodical chart. It's very clearly structured. It's very easy on the eye. And it's just great to use as a blend with the time-based charts. Got some buying coming in on 3. You can see it here. Hammer candle on 3. We would have a hammer candle on 2 as well. As I said, we've got a 2-bar reversal on the 1 minute, so that will be on the 2 minute. You've got some extreme volume coming in here. This is even higher than on this candle. You've now got a doji candle. Volume's fallen away a little bit, but you've still got a lot of buying coming in under this candle. We'll see if it's enough to actually give us a reversal trade. And over on the 15-minute, of course, there's nothing on the trend monitor. You know, it's still bearish. If you're trading this as a longer term opportunity, then you wouldn't be particularly concerned about what is going on the 1 minute or probably even the 2 minute.
Would you say, if you've missed that and then you've got the consolidation, would you look to get in after the breakers of support? Sometimes you're not going to get these trades.
Yeah, it's getting in is always an issue. It's one of the candles that we always reference, and it's another issue that we spend a lot of time looking at in terms of the education program, is particularly in short positions where the sort of candles you're looking for is once the markets, you've perhaps missed the start of the move. To go back to what I was saying earlier, supposing that you haven't taken a reversal position, so you're not in that trend, the reversal then takes place, and you're starting to see that trend develop, and you want to jump into that trend, but you're not quite sure where to get into it. What you're waiting for is a congestion phase to develop, and then you're waiting for a candle or a group of candles which signify weakness coupled with volume. In other words, you want to see the market try to rally under decent volume, probably wicks to the upper bodies of the candles, maybe one or two, or maybe one, some congestion. Maybe you see other signs of weakness. Maybe you're seeing a lot of volume going in, but the market not going anywhere. Maybe a narrow spread candle, something like that. And those are the points you're looking for as a re-entry, as an entry to an existing trend that is already underway. Those are the sorts of signals that you have to look for. It's not a lot of traders just sort of blindly guess. And of course, in conjunction with that, what you're also looking at constantly is you'll be looking at the CSI, because what you want to see on the slower time frames is that that trend is still in place. The buying or the selling of that particular currency is still good, and therefore in conjunction with VPA and in conjunction with the candle analysis, it just tells you that this is an opportunity to get back into this market in a relatively safe way. It's not, it's not a, oh, I've missed the move, so I want to get in. It's not that kind of emotional response. It is an analytical, common sense, logical based decision-making process using volume price analysis and understanding candles and candle patterns, and also understanding the difference between primary and secondary trends, and in conjunction with all the indicators in multiple time frames. Let's pop that out of the way. I hope that answers that one. Was that a question on? That was my question. Oh, it was Anna's question. Because I'm always asked. It's a question we do get asked a lot. Okay, we're now starting to see a little bit of bullish sentiment come in, which is really just representative of the fact that we had the volatility candle here, and we had some very strong buying under this candle. This was a doji, this was a doji. These two candles on their own don't really signify anything. They signify indecision, nothing more, nothing less. They're not signifying a reversal. This one certainly is, because this is a pucker candle, a true candle of a hammer. So you are expecting, you're witnessing buying, because if this had been heavy selling in this candle, then this should have been a nice widespread deep candle, something like that. Even more than that, if you take that as your benchmark, for example, and say, well, that volume and that price action, if that's in agreement, there's no reason to say it isn't, then this candle should have been certainly that size and a little bit more, given the volume underneath it. Therefore, you would expect, that's what you would expect to see, because it's selling. Well, in that case, it can't be. It has to be buying. So the majority of the price action in here, or the buying or selling, is buying, and therefore you expect a bounce, which is what we're seeing at the moment. And in fact, going to the 15-minute chart, this is a little bit distorted because we had some extreme volume over here. Let's pull that over a little bit. There we go. The sort of candles you're looking at for an entry, getting into a market, are probably not great examples here, but the sort of candles, this sort of candle, for example, this one, for example, market tries to rally, falls back, exhausted, decent volume under there. You're expecting the market to turn over from there. So, that might be a point at which you considered a re-entry. You've got them here. This, for example, this is the sort of thing you're looking at. You've missed all that, and now you're thinking, well, okay, where is this market going? Am I going to get another short out of it, or is it going to reverse? These are the sort of candles you're looking for. And particularly the sort of thing where you see a lot of volume driven into the market, as we've got here, and the market didn't actually go anywhere. A narrow spread candle, it's an anomaly, clear anomaly. And now this is starting to develop into a reversal on a slower time horizon, because we've now got a candle develop with a decent wick to the lower body. You can see it here, good volume underneath, and the anticipation is that we've got the first sign of some buying coming into this market. Does that mean this market's just going to go like that? Nope. What it means is that we've got some buying coming into the market. We may see some congestion before we see a reversal. V-shaped rallies do happen, but not very often. Generally, what happens is you'll see the first signal, then this might be followed up with a further signal of some buying, if indeed it is buying to follow through, and that will then be followed by a congestion phase and possibly a reversal in the longer term. Can I pass back to you?
Absolutely, because we've got another one coming.
Okay, I'm just going to pass back to Anna.
I've actually got the New Zealand dollar up because it's New Zealand dollar and Aussie dollar normally are quite sort of staid, aren't they? But this week, both currencies have had some very dramatic moves from because of fundamental because of their respective news releases. The New Zealand dollar is interesting when you look at it across the time frames on the CSIs, and I've got them here. Let's have a quickly. Let's have a look. Where is it here? Was it gone? No, there we are. Right, this is let's go up to the 10-minute because that's the one I've been looking at. Right, that's the dollar, that's the New Zealand. You can see the extent of the sell on the currency there. But if you go right up to the 30-minute, you can see here very, very overextended. You've got on the hour, again, very, very extended. The New Zealand is certainly one of the weakest, if not the weakest, in this time frame. You can see the dollar rising and yen rising as well. And I think on the 4-hour, it's still pointing lower than the dollar is still pointing higher. So when you get a situation like this, as I said, and you've had such heavy selling, trying to rejoin, as David was saying, the move lower, it's really going to be down to you. At some point, everything comes to there is going to be a stop. There's going to be a lot of stopping volume coming in, and we're going to get the opportunity to take a trade to the upside, as it were. What's also interesting you have to consider is these volatility candles. This is the candle on the hourly chart, and you can see the extent of the move on the New Zealand dollar. The New Zealand dollar doesn't normally move in this very, very dramatic way. We have here a classic case of a way we had the volatility triggered. The price action we're seeing at the moment has actually been contained within the spread of the candle. So the volatility itself is also acting as a sort of support and resistance. So if this is going to go lower, where's it going to go? Well, it's certainly going to have to take out the low of this candle, which is perfectly feasible. But the first reaction was a move higher. That was a perfectly acceptable trade. Then you had the resumption lower, and you can see these waves, but essentially the primary move is lower, and you've had these secondary moves within the primary trend. And as traders, the question, they say, well, I just want to trade primary trends because that's where the biggest moves are. Well, that's not always going to be possible. So you just have to trade the trends. They could be part of the primary trend. They could be a secondary trend. Sometimes they're even micro trends on the very fast time frames, such as the second charts that David has been showing. And to get an idea of the kind of move that we're talking about, this is where, and we keep banging on about it, and people say, oh, sometimes their eyes glaze over because we talk about it so often. This is where you have to have some kind of complementing chart to your time-based chart, and which is why we believe the Renko is so good, because this is the primary. You can see clearly this is the primary trend lower, interspersed with these secondary trends. Now on the Renko stayed relentlessly red. Does that mean that it wouldn't have been possible to trade that maybe on a very fast chart? No, it doesn't. But with the Renko, if you're in the move or you're thinking you're getting into a move, the Renko is as good as anything to help you with those re-entries. We can see here we had a change in the trend dot, we had grey, then we had a couple of blue, nothing here. So the way we use this particular indicators, they all have to line up with the colors. You are going to get choppy, as you can see here, they can flip-flop, but this will also be seen on the time charts as well. But we're talking about a move that is underway. So this is the move. You've missed this move. You think, okay, is that a reversal? Maybe that's a reversal. Well, it didn't play out on the Renko. So you could say, well, okay, it's going to carry on. You don't know at that point it's going to carry on. This is where your support and resistance comes in. You look at support and resistance. You look at, if you've got a CSI, it will highlight that this is going to carry on lower. And it did, with these little sort of minor pullbacks here. And at the moment, we're in this little, so far, minor pullbacks. We can see everything is overextended. Now, if we go into the time chart, which is 3-minute chart, this is the volatility that was that came out with when the news was released. This is the stopping volume, which is great. One candle, hammer candle, lots of volume underneath it. Some traders just like to trade the one. It's a very strong candle, the hammer candle, but you know, going off one candle, it can pay off. More often than not, you really have to wait. It's just a first signal that something is going to happen. What has happened, what traditionally happens, is it tends to go into sideways. Now, what you want to see here with the up candles, you want to see volume, because you know what you don't want to see is an up candle with falling volume, because that is an anomaly. I've got a 200 MA here. I've got a fractal adaptive 200 MA. That's also capping this move. You have got the support platform here. So is this just another one of those little pullbacks that we have seen all along with the Renko? So you just have to wait, have to see what the volume and the price action is telling you. And again, we have another up candle here. Look at the volume underneath it. It's not really very, it doesn't give you a lot of confidence. And again, look at the trend monitor. Now, what can also be happening is because we've had the reaction, just everything is calming down. It's not going to go anywhere. You know, we've had the sort of burst of activity. We have got some more news later on. Maybe the market is going to wait for that news. But that's what you're seeing on the 3-minute chart. Back on the hourly chart, which we had the volatility candle, let's go to the 30-minute, where this is the move we're seeing. It's a pull away from the volume point of control. But again, this is the volatility candle, the range of the candle that we have on the hourly chart. We're still trading within. So the volatility candle of itself will also give you some strong support and resistance levels as well. So that's what. Anything you want to say on that one, Darren? You want to say? And on the daily, just for context as well, yesterday we had, you know, was that a tradable wick? Quite possibly, but the bearish sentiment has resumed. Now, if that's going to continue, this volume has to increase quite substantially. So maybe there is going to be a reversal happening. We'll have to wait and see. Of course, we've got holidays coming over. Once today's over, I think most of the markets are closed tomorrow, aren't they, David? Even the forex market. You have to check with your broker. So really, it's a case of waiting and seeing, or moving on to another pair, moving away from something like the New Zealand dollar and going to, let's have a look, what have we got here? So we have here, this is a 3-minute. You don't really want to see this, all these sort of lines sort of wiggling about in the middle, because they tell us they're not, you know, there's no clear divergence one way or another. We've had the catalyst of the news giving us some price action, and this is what often happens. David, is there anything else you want to say? No, is that it? Brilliant. We are actually back. We're going to do the indices later, which is very, very interesting. Really looking forward to our third session of the day. Before I go very quickly, let me just highlight for those of you who maybe don't know about the indicators. They are available from Quantum Trading. Just bring up the front page of the site. There they are. MT45, Ninja Trader, and as David said, Trading View. You can buy them individually as a bundle, or we do have a full package of indicators, and the advantage of the full package is that when we develop new indicators, they are automatically added to your package. You only pay once, so there's no charge for upgrades. New indicators, they automatically get added. But you can start with one, and the one we always suggest that people start with is actually the CSI. And if you've not come across our CSI before, if you go down, if you just scroll down the front page of the site, there we are, they're all individually labeled. Here we are. You just click on there and it will take you to the CSI, and also lots of videos on how you can use it, support pages, just explaining other examples than that we have shown here today. Is there anything else you want to add to that, Elaine? No, everything is covered by our 7-day money back guarantee. But if you want any more information on anything you've heard or seen today, you can either drop me a line, anna@annacooling.com, or you can contact me on one of my forex pages, or you can email david@quantumtrading.com. So if you're coming later in about, was it 3:15, 3:15 our time, which is great, we'll see you then. Otherwise, we will see you next time. It's unlikely we will be here next week. It will be more likely the week after. We haven't taken a break this week, but we're going to take a break next week. So whatever you're doing, have a lovely day. If you're in the UK, it's actually fabulous weather. Enjoy the weather, and we'll catch you next time. Take care.